Disciplinating over emotion. Live session. The Trading Path Live Trading. Stay sharp. Focus mode. Execution phase.
Order filled. Order filled. Order filled.
Locked in.
Order filled. Order filled.
Trust the process.
Order filled.
Patience tower.
Order filled. Order filled.
Trust the process.
Order filled.
Patience tower.
Order filled. Order filled.
Trust the process.
Order filled.
Patience tower.
Order filled. Order filled.
Trust the process.
Order filled.
Patience tower.
Order filled. Order filled.
Trust the process.
Order filled.
Patience tower.
Order filled. Order filled.
Trust the process.
Order filled.
Patience tower.
Order filled. Order filled.
Trust the process.
Order filled.
Patience tower.
Order filled. Order filled.
Trust the process.
Order filled.
Patience tower.
Order filled. Order filled.
Trust the process.
Order filled.
Patience tower.
Order filled. Order filled.
Trust the process.
Order filled.
Patience tower.
Order filled. Order filled.
Trust the process.
Order filled.
Patience tower.
Order filled. Order filled.
Locked in.
Order filled. Order filled.
Trust the process.
Order filled.
Patience tower. The Trading Path. Live session. Disciplinating over emotion. The Trading Path. Mastery in motion. Disciplinating over emotion. Live session. The Trading Path live trading. Stay sharp. Focus mode. Execution phase.
Order filled. Order filled. Order filled.
Locked in.
Order filled. Order filled.
Trust the process.
Order filled.
Patience tower. The Trading Path. Live session.
Oh wait, Carmor. Didn't say you went on different.
Hmm?
Are you not going to are you going to stay in the
Yeah,
call
yeah, yeah.
or
So how it's gonna work? We're gonna view the stream on YouTube Live, but y'all can ask me the questions later on the Discord or in the YouTube chat. Yeah, yeah. All right. Let's give it 12 more minutes and we will start. How's everyone doing?
Good, man. Can you hear me?
Loud and clear.
Oh, okay. Yeah,
I
no, I was
thought
just writing
you
to you on YouTube. I was like, how am I hearing him right now? I was telling you, thank you for doing this. Really appreciate it. I'm looking forward to the class.
No problem. No worries. Let me do like this. There we go. So you can speak with me on a Discord, and Maybe there's a little bit of delay on this on YouTube. We'll see.
Good, man.
And today, we
Oh,
are
I'm hearing my own voice again. That's weird.
I just mute YouTube if you're listening to me on Discord.
Oh, okay.
Okay, today will be a long session, the one and only one. Okay. So what I've realized is over the years of my trading, I've learned a lot of concepts. Okay. ICT, SMC, higher time frame analysis, and then trend lines, IC flow. So what is the deal with this basically? Let me we're gonna cover a lot. Okay. The one thing that all of these strategies will have in common is order flow. The one thing. Okay. There are people who will come from trend lines and price action. There are people who come from ICT. There are people who come from high time frame. And there are people who come from deep effort. Now, all of this works. Okay. There's not one that works better than the other. But what I've realized is, what kind of trader are you? Are you a scalper? Are you a trader that, okay, you just want to put that one limit order and let price go, right? Are you a trader who wants things very simple in a way of trading? Are you a trader who looks a lot at price action, right? And over the years of trading, and over the years in, wait, let me, there we go. And over the years in trading, right? There's been, for example, for me, I've been trading ICT for a very long time. And I would never understand why didn't we sweep Asia high and then we dumped. Back in the day, I was thinking, oh, it's the algo. It's the algo that is cooking me. That's why we're not going to seek and destroy, stop hunt, whatever. Something like that, right? Or sometimes I would go to the high time frame, right? So I'll go to the 15-minute and I'm like, oh, there's a gap over there. But where in the 15-minute gap can I potentially look for a trade? Or sometimes when I'm doing trend line and price action, sometimes price goes one way, takes me out, and then just proceeds to dump. And the same thing goes for deep effort. Why does one work better than the other, right? And this all has to do with one simple fact. Where are we in the market? Okay? All right. Where are we in the market? What is the situation? How can we do it? Like, how do we identify? Do we use the X model? Do we use SMC? ICT, HT fit. Actually, to be honest with you, all of these concepts, they work. There's not one that works better than the other. No, they all work. But it's timing. That is the most important. It's timing your trades. Okay? Now today we're going to cover a lot. So bear with me. So once and one time only. So if you haven't yet, please subscribe and join our Discord. Okay? So grab your coffee, glass of water, do what you gotta do. Because I ain't doing this again. And we'll wait 5 minutes. Fantastic. I hope everyone has having a great weekend. I hope you guys made money on Friday, with the dump. I only made, I think, 800 or ish with a long. Yeah, I managed to grab a long in that dump, right? And again, Mark, like it's my style, right? Doesn't mean we'll work with everybody. It can mean like I'm a mean reverter trader. I'm not good at trending days, and I'm definitely not good at breakouts. A little bit, but I'm more mean reverting, reversal. That's how I always traded. And once I started to change the way I trade, everything went downhill from there. Until I went back to to what I am used to and what was comfortable for me. So even like yesterday, big downward movement is still fine. I still managed to catch along regardless of everything that's happened because I have specific rules and things that I'm looking for. Let's see some absolute gold here. Yes, sir. Okay, we'll start in roughly 4 minutes, guys. 4 minutes. We're just waiting for more people to join. And all of these concepts. It doesn't mean you need to work, I'm only going to use this concept. I'm only going to use the other concept. All of these concepts, they work as one. And they all have one thing in common. And that's thanks to Fabio, which is order flow. And today I will show you how I personally do it. Okay? How I personally do it, what I personally see. Doesn't mean I'm better, doesn't mean I'm better than anyone. No. Nothing like that. But what I like about this is I have enough tools to adapt to the situation, what the market is throwing at me. If it's a trending day, okay, then if it's a trending day, and that means I don't want to use my mean reverting model, I'll probably go for the IVB model, right? If it's a scalping, if we're in consolidation of scalping, I'll probably go to the TTF model, right? If we are consolidating between Asia and London, we're just chopping in the pre-session, I will go to the ICT model, or in other words, the IC flow. if I'm looking for really big levels where I want to just put the limit order, that's when I come to the HTF model. Okay, so we'll start in 2 minutes. So get your coffee and we're gonna get ready. All right. Let's start. So we are going, the first thing before we do any or start touching any of these models, we're going to talk about the daily RTH profiling. And it's like the first thing I do to identify or choose which model is better for the day. Okay. Perfect. Okay. So here it is. Now, okay. So, for those who know, this is the cash profiling, okay? Or we know the RTH profiling, right? And this is the first step I do. I have a list, a list of steps that I do before I even start trading, right? So the first thing I'll do, okay? And let's take a close look at these
Hey,
profiles.
are you sharing something? Sorry.
Yes, we are in YouTube. You can ask questions here on the Discord. Yes, we're on YouTube. YouTube Live.
Okay.
The link is in the chat.
Okay, let me join that.
Yes. So here, what happened? We can identify that we're going on an uptrend, right? This is 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day, 8 day. This was Wednesday, okay? Wednesday told me, gave me a first sign of, okay, the trend. You guys got to understand something. Price is fractal, okay? So what I mean by this, we all know the concept of the concept of higher high, higher low, higher high, higher low, higher, right? When you see candles, you can view the RTH profile on the same manner. And what I mean by this, high, no, high, no, high. Okay, when we came here, right, depending on how this day closed, I'm still bullish on this day. But this profile already told me, gave me a sign telling me, okay, hang on, something is different. Notice the shape of all these profiles. Okay, so this is obviously a P, right? This was a consolidation. This is double distribution, but all the value in the middle. This was another P, but and then this was a consolidation. But I don't know yet if I'm going long or if I'm going short until I saw this. Okay, now step number one, what I do, once I identify, okay, this profile closed below this profile, okay? And again, this is not my teachings. This is what I learned from Fabio and the DeepCharts team, okay? I'm not making, this is not mine, but it's very simple. We went up, now this profile closed below. You can see that the price, the POC of this profile is below this profile, this profile, this profile, this profile, so on and so forth. And also the value area high and low are also below these profiles, okay? So I'm bearish now, okay? So what's step number one? Let me mark the point of control. That's step number one, okay? That's one. That's another one, okay? But right, so maybe what could happen, price maybe opens here, bounces from this level and goes down, or bounces this level and goes down. I don't know yet, right? Then I look left. So on this day, we could see during the pre-session, we were kind of like in this area, below this area already. So look left, right? Do I mark this POC? No, I don't. This one, no, because, you know, it's already inside. Do I mark this one? No, because this profile already broke it. Do I mark this one? No, because I already have this one. Let me look more left. Do I mark this one? Yes. Why not? Let me mark that one as well. Now, when market opens, what happens? Okay, you can be as simple as this, right? But let's add more confluence to this, okay? So for instance, so this is what I mark, right? Now, let's say, let me add some options level, right? So perhaps I would like to use the NDX levels, right? And let me add a bit of QQ. And let me add a bit of this. Okay, wonderful. Okay, so now if we break this, these are all gex levels, right? I only have gex 1 to 5, right? And you can see where how price tends to have some sort of reaction in these levels. Okay, so that's step number 1, right? You mark the point of controls. Okay, now we're going to touch on some models. Okay, so really simple. Identify the daily profile. So for example, we are definitely short for Monday. Okay, but you want to see something crazy. If I mark the POC of this very profile, oh, but Carmor, price didn't go there. Yes, it did. On the ETH. Let it load. There we go. Ah. See? But obviously the market closed at 4 o'clock, so that's why we couldn't see it anymore, okay? Okay. So the first one we're going to cover today is the X model, okay? So now I have identified that in this case, the X model doesn't take into account the profile, okay? So what is the X model? The X model goes like this. Let me get rid of this. There we go. Okay, so as you can see, I took a very nice long here. Some shorts down the line. Oops. All right. As price was going here, so the X model, right, on the range chart will only print when we are at value area low. Obviously, the market is closed, right? But in this point of time, we were at value area low. But we cannot just trade the signals blindly. So what do we do? Or what did I do at least, okay? So here, as we approached this level here, this area here, which we don't see it at the moment, but we had from the GEX spot a short gamma, basically, okay, on the options. The price, I did not have any options level down here, okay? I did not have any options level down here. As a matter of fact, let's add all the options levels. So in this case, let me just grab, we'll go to this beautiful, hang on, give me a second. Just gonna grab the levels from Friday. So here, okay, this is our TTP command center. It's going to be released very soon. Okay, and let me grab all of them. Let's say I'm just gonna get the primary levels. And there I have it. And then for the GEX levels, secondary, I'll grab QQQ and NQ. I'll get GEX 1 to GEX 5. All selected. Okay. now here and here. Okay. The first long, okay? This was the first one, the first opportunity for long, as we can see. I will wait for price. Okay, I will wait for price to come to a level, the options level here, and I will wait for a signal. In this situation, right, this was a little bit risky because I did not have any deep effort. So this would have been a loss, okay? This would have been a loss. I would not take this because we did not hit this green line of the options or the GEX. We kind of wicked through that one, but not great until we saw this one, okay? Now, notice the difference with this, and this, okay? So, one thing I will explain is I like to call the rocket theory. What is the rocket theory, okay? The positioning of an aggressive participation in a candle. Imagine this is a bullish rocket, okay? That's the flame. You want this sucker to go up, right? Then, what do you want? You want to see, for example, if you have absorption in the bottom, that's perfect, right? Because sellers are getting absorbed in the bottom and it's pushing up, okay? Sometimes that goes for big trades, imbalances. It can be bullish, it can be bearish, doesn't matter. The positioning of where these bubbles and imbalances are very important. For example, you do not want to see an imbalance at the top here. Why? Because this is contradicting what you want price to do, okay? Because if you have some sort of big trades at the top or imbalance at the top, that means buyers are getting absorbed. If you have a bearish one, that means sellers are in control or are aggressive here, okay? And this is what we have here. We have a lot of what? We had a buy signal, but then what did I see? I saw a lot of sellers coming in, okay? A lot. You see? A lot. Buyers were trying really hard to push it, but sellers came back down to push the price down. And as we went lower, 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 until I had my buys. And notice this one here. This candle. We have a candle like this, right? With a signal. And look, we have a bubble at the bottom wick. Not only that, we also have a signal print from the big trades at the bottom. Bearish. What does this mean? Sellers are getting completely screwed down here. And I took this one, okay? And as price was going up, now if you are doing two minis, right? This could have been here, okay? And you go from GEX to GEX potentially, right? And as price is going up, what can we see? More. This green one is the buy imbalance, okay? So on the X model, the purple comes from the big trades and the cyan comes from the big trades. When you see green and red, this is imbalance, okay, from the footprint charts. Notice the positioning of these imbalances on the candle. We have a green imbalance inside the bullish candle, another imbalance, green imbalance in the bottom part of a bullish candle. What is this? If we look at this almost like a rocket, right? Isn't this telling you it's building pressure to go up? Right? Now you can also play like that, okay? And you can target, like I like to do maybe 1 to GEX basically, okay? You take the trade, okay? And if you don't know where to take your do your take profit, here's a few ways that I do it. I'll target deep trades, for example. I can target the deep effort. I can target where these sellers are sitting, or I can simply target the next GEX level, right? So what we can see here is price came and hit this call resistance from the NDX and started to go down until where? This white box here is a buy imbalance. Okay, let me just check the chat to see if anyone's asking me questions there. Excuse me. Okay. This is a deep effort. Perfect. Now, this would have been a really nice long. Okay. But, oh, Carmor, but you got stopped out. So, it's very subjective where you put your stop loss, right? You know what? If you put your stop loss, it's risky. Why? Because you know that there's a buy imbalance down here. Price, typically, they can sometimes act as magnets, right? If they act as magnets, then price will come and revisit and perhaps tap that area, okay? So if you would have to take this trade, your stop loss realistically would have been somewhere down here, or at least this area where you see where the buyers are protecting, okay? Somewhere there. Or you wait for price to tap here, and then what can you see? Another rocket theory, right? Buy imbalance over here, tap, explosion up, okay? And then what happened again? Here. Price came. This is a deep effort, right? Deep effort, deep effort. No signal, no signal, no trade. Came here, no signal, no trade. Came here, nearly tapped this area. But look what we tapped. A GEX level at the HVL of NDX. Okay, so NDX is the big daddy of NQ, right? So I like to use NDX a lot for these areas for reversals, okay? Because normally what market makers and companies or these big players, they'll typically do something, have a reaction in these levels. Whether we go long or short, we don't know. But we're going to have a reaction in one way or another, okay? Then what happens? Buy signal, taps into the deep effort, closes bullish, and you can target what? You could have targeted this deep effort, or you could even target the GEX tree QQQ over here, okay? Now, and again, this was a beautiful trade that I took with Will. Okay, so as price came here, this level came from a major gamma level from the GEX spot that I marked out, and I did call it out. Guys, be careful at this level. Price came, tapped it, and I did not hesitate. I took it, okay? Now, what happens? We tap it. Even if you missed it, oh, Carmor, I'm not sure if it's going to hold or not. Price came to the deep effort, tapped bullish, and then what? Explosion up, okay? So the zones that print from the deep trades are single prints. Can you briefly explain what single prints are and why they are important? These zones here, they come from the indicator called big trades, right? So now I have messed a lot with the settings, and it will only show me reversals, right? So if I have a bubble paired with a box that looks like a penis, basically, this is something that I will have to pay attention to, okay? So what happened here? Here, this is a deep effort, right? So 3 types. So there's a lot of things going on here, but let's read it together. What did price do first? We came to a major gamma level. We had a buy signal. Okay, perfect. We went up. We tapped to the deep effort, but then you can see here, buyers starting to get fucked and absorbed, and price went down to this deep effort, close bullish. Here's your second opportunity, okay? Then price retraced. Then this was it, okay? This was it.
We tapped into deep effort. We have what? Sellers here getting absorbed at the bottom part of the candle. The bottom. Okay? So, rocket theory. Then, what else we see? An indicator print, a signal print for a reversal. Okay? As we can see here, this is a rocket theory. Tap into deep effort. You must wait for a price, or at least a range chart, to tap into some sort of area. Okay? You cannot just blindly take it without tapping into an area. Otherwise, if you do that, you're just chasing. Okay? What happens? We come up here, tap again. You guys can see, right? Tap. Okay. So here, how do you set the imbalance zones? Guys, these templates after this event, after today, will be provided completely for free in the Discord. All you gotta do is download. All right. Now, what happened here? Here, you can see. Let's get rid of some of these things here. There. Okay. Here's the first deep effort. When you have two deep efforts here, okay? It's better just to include like that. Okay? Do you take this one? No. It didn't tap anything. Take this one? No. Do you take this one? Maybe. It would have been a loss. Okay? Your stop loss would have to been all the way down here. Okay? Or you take this one, which would have been a bit better, and target where? Okay? Don't trade profit and loss. Target where? Look at what's in front of us. Deep effort. Something, price can reject from here. What do we have here? This red bar is an imbalance. It's an imbalance from the footprint chart. Okay, they are more significant than these prints over here. Okay, the red and the green are more significant. You can see if I mark this area here. Is it clear? Just kidding. Fabio, if you're watching, I admire you. Okay, no hate. I love you. So, what is deep effort? Deep effort is a technology proprietary to DeepCharts only, made by Fabio Valentini himself. That's all I can say. You treat it like as fair value gaps, basically. Okay? And what happened here? We came up here, and what happens? Boom. Down. Okay? Now, unfortunately, because this is the X model, we don't have a sell signal here, because we did not have any value area high. As we know, on Friday it was just dump. Okay, but again, you can still use this even regardless if you have a signal or not, if you understand where to look. Okay, here's a sell imbalance. Price came up here, tapped it. Do you look at this one? Oh, what if I take this short? Yeah, you could have scalped it. Oh, what about this one, this one? Why are you guys taking this short when there's a nice little level here? Okay, now, for example, here, tap, deep effort, then you have another sell imbalance here, and this bearish candle right here. Okay, so again, whenever you see, notice one thing, guys. Look at this bubble. You see any print? No. Look at this bubble. You see a print? Yes. What happened? Price came, reject, close below, collapse. Okay? Again, you see this imbalance? Price came, almost tapped it, down again. So on and so forth. Okay? But again, it's really important that we know where we're trading. Okay? This long was enough for me. I got from here to here. That was enough. That was a quick $800. Okay. This is the X model. Okay. Now, as I am using the X model, I also like to pair. We're going to talk about this later. This is the TTF model, okay? It's price action and trend lines. We'll go through that later on in this, as we go through this video, okay? But I always like to have the 5-minute chart in front of me because why? Where do you find the location and levels for your trades? So, location and levels, it can be previous day's point of control. So for example here, okay, so simple. Sometimes no need to overcomplicate things. So you can find these levels where previous day's point of control. Okay, that's one. And then you look left. Are you going to take any of these? 1, 2, 3. No, because why? This, look at this one. You'll take this one. So that's how you do it, okay? Like that. Now, if you add, you know what? Let me grab all the levels just so we can see everything. So if you're wondering how I get my levels or these options levels, I'm going to show you guys. So this, again, it will be available for the community on my Discord for free, okay? There's no charge, okay? So how I grab this, I'll come here to the GEX tools, I'll come here to the download levels, and you know what? I'm going to grab everything, all levels, all GEX, everything, right? So I'm just going to go download all NASDAQ, okay? Then I'll come to the cash profiling chart. I'm going to import, and boom, okay? Now you have a lot of levels, as you can see, like it's littered with levels, okay? And on this day, it's a little bit difficult because on Friday, this is not normal. You just slice through everything, okay? Just slice through everything. But just to show you where I grab these levels. The video will be, someone asking if the video will be available to watch later on, and we'll see. Right now I just want to focus on this this event, and I'll see if I can do something about that. Okay, next. Okay, now for example, okay, are we clear with the X model? I'll take some questions regarding the X model before we move on. Okay, so basically, like for example, we had it's not showing anymore. Yeah, it's not showing anymore. Okay, never mind. So using the GEX levels or sensitive levels, right? This is how you do. Just keep in mind, okay, these guys over here, the one that look like a dick or look like a duck, okay? These are your important ones, all right? Now, for you to have this, you're going to need to have MBO, okay? MBO data. If you don't have MBO data, there's another way, there's another template that is similar to this that you can still use in the Discord, okay? But look again, look here again. What happened here? Big buys? Hi, could you fast explain again what are the boxes printed simultaneously with the big trades and explanation? Boxes, are you talking about deep effort? This one or this one? These boxes are called deep effort, okay? It's a proprietary technology from DeepCharts. MBO data from prop firms. No, you can use prop firms. I believe Apex, you can buy the level 2, right? I bought mine from DXFeed, Depth of Market, from the DeepCharts website, and it's cheaper. So yeah, okay, so pay attention to these things, okay? So you don't have to only use the buy signal. Obviously the buy signal are better, not deep effort. So what boxes are you referring to? This one? Okay, so you don't only have to wait for the signal, but just be careful. When you do not have a signal, at least wait for something. Don't blindly go in. Don't blindly go in just because you see a deep a bubble, okay? Wait for something to confirm for you. Like for example, although this trade worked, okay, but this was better. You had a deep effort with this buy imbalance over here. Tap, explosion up, okay? And as price was going upwards, we can see we start to have the sell signals, but this one failed. Why it failed? Because you probably didn't hit a level yet, okay? Well, we have one very nice level up here. Very, very nice. Okay, look what happened. This happened. London session. How come do you use the POCs as levels of interest instead of value area high, value area low? So I use the point of control because that's where the most money was established. And we'll talk about delta and everything, but not on the X model. The X model is something else, okay? The X model already tells me, because the X model, these prints, these signals, they already tell me when to enter because it will only print when we are at value area high, okay? But in value area high, there are some levels that right now I don't have because the market is closed. But in value area high, that's probably some GEX levels in this area. And as we came up here, look where we tapped. We wicked the previous day's high up here. But look left, look what we have over here. Okay? Come, retrace, you take, and obviously, I know this is a bit of a hindsight, but fuck. Okay? Alright. Now, when you're doing the X model, okay, there's something I do want to point out. Let's take this long as an example, this signal here, okay? 21, 26. Actually, no, that's, I want to use New York. Okay, here. 9:30 New York open. Okay, so, and again, this is really important, guys, okay? If the candle is bearish and you have 3, 4, or maybe even 10 seconds left, 3, 4, or even 10 seconds left for this 1 minute to close, and you got a buy signal before this candle closes, which only has what, few seconds left, it's better to ignore the signal, let this candle close, because chances are when the next 1 minute candle opens, it will probably sweep this low and then go up. So what that means in the range chart, it will sweep your sweep your stop loss and then go up, right? So if you get a signal, pay attention of the 1 minute candle. If we only have a few seconds left for that 1 minute candle to close, let it close, ignore the signal, wait for the next 1 minute candle to open, sweep the low, and then you go for it, okay? Can you briefly describe the X model when you use it? I use the X model pretty much every day because I'm a mean reverter trader. Okay, value area high and value area low. But again, like I said, here it's really important. When do I know the X model is going to be in my favor? Because so if the X model usually works best, well, let's say here on this area, right? I want a long and I want a short. Okay, so where would I typically look for a long? Maybe I would look for a long down here at the value area low of the previous day's RTH profile, and I would look for a short up here. Okay, now the next thing we can do on the profiling is we can actually enable the delta, for example, and we're going to go a bit deeper now. And again, this is very important. No matter which model you use, if you don't understand this, nothing you do will work. Well, I'm not saying nothing you do, but chances are you're going to get stopped out a lot. Okay, so for those who don't know, this is delta, okay? Delta is the sum of buying and selling, okay? So where can I learn more about the X model? In my Discord. And the X model is my model, so you won't find it anywhere else. So, yeah, thank you, Munu. Appreciate that. So, for example, this is delta, right? And from this delta, as we can see, at the value area high and value area low, okay? Who is, for example, the biggest? Okay, never mind. Let's go here instead, okay? Who is the biggest delta in the value area high? This one, right? Who is the biggest delta at the value area low? This one, right? Where is the POC of this profile? Perfect, okay. Now, if the market opened around here, if the market opened around this area, okay, then what I would try to look is I would wait for price to come to this area. If I have the X model buy signal, I'll take a long from here, okay? If I am here and I get a sell signal from this point of control, I will short from here. If I am all the way up here, I will try to and I got a sell signal, I will short again. And if it fails, then I have this point of control over here, and if price comes here, I will try to short as well, okay? There's a very amazing trader called Trader Kane, right? He's not looking for this. All he wants is this, okay? And I 100% agree with him with this, okay? Thank you very much, Carmor, for your effort. Appreciate it. I just want to help you guys, all right? But we got a lot to cover today, so let's keep going, okay? Now, the X model works fantastic when we are in a range, basically, okay? The X model is not good when we have a breakout or trending days. Actually, most models, okay? All right. Now, we're going to talk about the... Tell me in the chat, which one do you want me to cover? First of all, do you guys understand the X model? Don't live me. Do you guys understand the X model? Any questions? Any questions regarding? Tell me in the YouTube chat which one you want me to cover. So we covered the X model, which is the most simple one. All right. Now, how do you combine the X model with options flow model? All right. So here's an example I'm going to tell you. So let's grab all this mess again. Here we go. Okay. For example, you see? So I just uploaded some options level in my charts, okay? These are options levels, okay? You see all this? Okay, so tap, buy, take. Broke, nothing, 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 nothing. See? It's very important you wait for price to come to a level. Don't blindly take this. Okay, and look at this one here. Ah, look at this one. This one, we have everything, okay? We got a buy signal. We got sellers getting absorbed here. We have a print with the bubble. We have two buy signals, and there you go. Pretty much, okay? Two minis, risk 250. Yeah, potentially. Very simple stuff. It's just important that we wait for price to come to a options level, right? And let's see if we have a few more as an example. Okay, this broke, this broke. We've got nothing over here, we've got nothing over here, we've got nothing over here. Oh, got something over here. Okay, here's one. Okay. You could have scalped this, okay, but I'm, you know, I don't think, I'm not gonna say, oh, I'm not gonna cherry pick. You probably get stopped out here. Okay. So in a trending day, this is very difficult, right? Until this one. Here. And also, one thing I do want to cover. Do you take into account the gamma environment? We are in positive. Yes, absolutely. So on a gamma environment, if we are negative, if we are gamma negative, yeah, we are looking for trending days or breakout days, which falls in line what I'm going about to cover now, which is the IVB. Okay, IVB, I don't like IVB when we are in choppy days, right? Because it'll just close back in the range and stop me out. Okay, now the X model is fantastic when we are in positive because we're going from one level to another level. Okay, now another thing is that in end of day levels there are two types of levels. We have primary levels and secondary levels. What are primary? What are secondary? Okay, primary levels will be your put support, your 1 day max, your 0 DTE, your gamma walls, so on, so like this one. It's a call resistance gamma wall, so on and so forth. These are your primary levels. Your secondary levels are your GEX levels. GEX 7, GEX 1, 2, 3, 4, 5, 6, 7. The lower the number, the more stronger it is, right? So GEX 1 will be the strongest GEX comparing to GEX 5, okay? For me, I personally use GEX 1 to 5 of the QQQ. Okay. Now, you can also do it like this in a way, right? You can also, and again, we're coming back to the RTH profile, okay? You can also do it in this manner. Right there, okay? So we have the primary levels only, okay? So what do we have here, okay? If, okay, for example, in this day, okay, we have a, well, first of all, let's mark the POC. Okay, that's a POC right there, perfect. Okay, where's the highest delta in the valley area high? Okay, this one, okay? Now, if you want to be more precise, okay, more, but adding more confluence, you want to short, okay, we want to short at value area high, for example, right? So here's the highest delta of the value area high. It doesn't matter for me personally whether if it's bullish, green, or bullish or bearish, right? I just know that that's the highest delta. If it's a green delta, that means buyers are being absorbed in the level. So if where buyers got absorbed, sellers will protect. But now to make it even more, even more, how you say, with more confluence, I can see that what we have a 0 DTE of the QQQ up here. So now I can almost like pinpoint, okay, this is a better area for my short. And at the same time, we do have a low volume node. This gives me super confluence to take the short, okay? So for instance, let's see what happened here. Right? So as price went up on this day, well, price actually opened down here, went all the way up here to this level, and then we started to dump, okay, basically. So wow, so New York opened, oh, look at this one here. So for example, okay, New York opened down here, okay, this is the RTH, down here, value area low, HVL of the NQ1, and perhaps there. So you could have longed from this, okay? You would take one loss, okay? That's your first loss, all right? But then this is, I hope that answered your question. Okay. So this is how I use the X model, okay? All right, next. Now, one thing is important as well. I want you guys to backtest this and prove that I'm full of shit. Notice how when New York open, right? When we're in the choppy section, go back into your chart and see every price action that started at 10 a.m. Eastern Standard Time onwards, okay? Why I say this is important. Okay, so here's New York open, right? Here's New York. You gotta wait at least 15 minutes for New York to open and then look for a trade, okay? So obviously, if New York open around here and you traded this chop by buy account, okay? And then after 9:45, you have your first buy signal here, which was a great long, okay? A little bit of chop, but 10 o'clock to 10, so the first 10 o'clock is the open of a 4-hour candle. That means every single time frame in your chart is opening all at the same time. The 1 second, the 1 minute, the 2, the 5, the 15, everything. Okay, except for the daily. Now, the first 5 to 8 minutes, it's a little bit unstable because, and this goes back to CRT, like candle range theory, right? The first 5 to 10 minutes of the 4-hour open candle, which would be in this case on New York at the 10 o'clock, is usually the manipulation. And what I mean by manipulation, it's either trying to create a top wick or a bottom wick, okay? So when 10 o'clock comes, don't get too excited if the price is going up and you go for a long, because what's happening? Because what price can be doing at 10 o'clock is this. You see price going up like that, you're getting all excited and you're entering long. But after 5 minutes, it starts to do this, right? And stops you out over that, okay? This is what I'm trying to catch with the X model, the wicks of a 4-hour, if you're doing the 10 o'clock, right? And let's see here. What time was, okay, look, 10:05. We got a signal print at 10:06. Okay, 10:06, not great, still a little bit choppy until this one, 10:09 onwards, right? So the first 8-9 minutes of the open of the 4-hour candle of the 10 o'clock, look, you would grab this long and be done for the day, and you can go and back test this as far as you want. Okay, it's really important, guys. If New York Open doesn't give you anything, if New York Open doesn't give you a trade, or it's choppy, or you missed the trade, just hang on, wait for the 10 o'clock open, give it a few minutes, watch how the candle is behaving on the 15-minute or the 4-hour chart. If it's going, if you want to short and the price is going up, that's good, because what potentially means is it might create that top wick and you enter the short and then it'll go down. Okay, what you don't want is, if you're trying to short, the price goes down first, right? That's the problem, because if price is going down first and you're trying to short, you might be entering at the bottom wick of the 4-hour candle. So keep that in mind. Okay, so next model. Okay, let's call, now we're going to touch on actually the most complicated of them all. Well, actually, hang on, before we move on, I'll introduce this chart. Okay, this is the vol chart. Okay, so in this line, and I've got a lot of questions in the Discord. Okay, so I'm hoping that we're gonna talk about this today. I'm gonna settle once for all. Okay, in this chart, you're going to notice here PE, PC. Okay, and you're also going to see AE and AC. So PE and PC, what does this mean? P stands for pressure, E will stand for extreme, and C will stand for control. Okay, so pressure extreme and pressure control. Okay, now I've done and settings for this to only show you very strong levels. Okay, only big levels. So, and the same concept that we saw earlier, right, with the bubble and the print also applies here. Okay, so this model here with the bubble and the print comes from the big trades. Yeah, big trades. And you can apply this theory in any of your charts, range chart, 1-minute chart, vol chart, whichever you want. Okay, 5-minute chart, whatever. It's the same principle. Okay, now for example, let's see if we can grab, okay, here, perfect. What's going on here? Okay, so the vol chart is a fantastic tool, okay, to see if, especially if you're in a trending market. Okay, what time was this? 9:30. Where's New York Open? Here. Okay, this is another one. Okay, so see this dashed line, it's blue and it says AE. This is telling you that there's so blue is for buyers. This is telling you that the buyers are getting absorbed in this area. So if you're trying to long here and you see this, be careful. It's best to get out. Okay, because buyers are getting absorbed. Okay, and as price is going, right, be careful again if you're trying to short, because now it's telling you what we have, a purple AC. Okay, so, and again, shout out to Law. He one of the members on the Discord came up with this model, and we back tested a lot, and I found something that I like. Okay, I like mean reverting. So the whole X model is based on reversals. So this just gives you an extra confluence. Okay, so for example, if you want to short, right, and you see sellers getting absorbed, hands off. Okay, hands off, wait. Okay, and then what happens next? what do you use this chart? When do you use it? I use this chart for the X. I use this chart for every model, basically. I use this chart for every model because this will always tell me when the buyers are, when and where the buyers are getting absorbed, and when and where the buyers or sellers are starting to put pressure. Okay, so for example, let's say you are in this price action over here, okay, this mess, okay, buyers absorb, sellers absorb, we have a big five, hands off, okay, oh no, and you're like, oh Carmor, I'm missing the move. Wait, look what happens next, okay, notice that we are in the GEX 10 of the NQ1 right here, okay. Now what do we have? Do you guys see PE and PC? This means sellers are putting pressure to push the price down, okay? You can wait for the price to come up here, test that, and then give you a confirmation to go short, okay? Now, amazing. Again, shout out to my boy who told me about this indicator here, okay? What do we see? This is a bullish candle going up, tapping a GEX level, GEX 10 NQ1 in this example, and the pressure control of the sellers. Then what we get a volume divergence bearish, okay? Even though the candle is going up, this is telling you bearish. And look left, what do we have here? Sellers here. You see all these bubbles here? Sellers, okay? And this vol chart, okay, the darker the color or brighter the color, the more volume the candle, the move is. So you can see this shade of white going up, and then you can see purple, white, and then gray, and then huge black candle. Okay, huge black candle telling you that the sellers are, there's a lot of volume in this candle going down. Okay, the outline of this candle is telling you whether it's bearish or bullish. Okay, now, excuse me. Okay, now again, price is going down, and look, when price go down, all right, now we start to see AE, and it's blue. Blue again stands for bullish, okay? But A stands for absorption. So do a little bit of alphabetical mathematics. Wow, is that a thing? Alphabetical mathematics. That's a thing. You heard this. You heard this first here. Okay. So now what is telling you? Buyers are getting absorbed. Hang on. Okay. If we break this level, we could potentially see price going higher, okay? When this candle broke this level, now we have a what? We have a print. You see here? We have a print. Pressure control, green or cyan, meaning the buyers are putting pressure for the price to go higher, okay? And we even have a big trades at the bottom of this candle. What does this mean? Rocket theory. Remember, guys, rocket theory. Okay, rocket theory. Oh shit, rocket theory. And we have, see, we have the big trades down here, right? So the big trades is down here, so it's pushing price up. Okay, then what can you do from here? Maybe potentially let's just mark this level and see if we have anything on the X model. We can go that far. Let's see if I can find it. Where was it? Yeah, here. See? This is where we saw that move, okay? So what happened here? This is where we saw, okay? We have a buy signal. You could have taken along from here, okay? And I know this is hindsight, okay? stop slightly down here, and then what? Where can we exit? Okay. Target the deep efforts, potentially, okay? Now, but again, why do you think this happened? And why do you think this happened? Okay? This is messy. This is clean. Let's look. 10:04. Remember what I told you about the 4-hour candle. And this one is 10:06, right? So this area here, this was the bottom wick of the 4-hour candle until it started to reverse, right? So you can see before it went down, we went up, right? Let's be honest, guys. Come on. That's this. You wouldn't hold until here. I'm not going to sit and tell you, you could have taken a trade here. Nah, man. You would have taken a trade somewhere here, right? Come on. Okay. All right. Let's go back to the vol. So that's also another way to use the X model, right? Using the vol charts as a confluence, okay? Now, price went up. And again, right? When we had that buy signal here from the X model, which we saw earlier, okay? What happened? See, we had a bubble with the deep trades down here. Look again. Huge effort to push the price down. But again, the bubble is at the bottom part of the candle. This is not good for shorts. And then what happens next? We have a huge up move towards higher, okay? And you can see here, this is the pressure. This is pressure from the buyers that they tried to push the price up, but they failed and the sellers took it back down until we broke, okay? Now, the same concept as we can see, right? We have a bubble and a print. And look what we have here. Okay, this is another way to use this chart. Price come here. You start to see this print. It reacted to this level, closed bullish, and then what it gave you? It gave you this indication, AE, and it's purple. So what does that mean? This is sellers AE. So absorption of the sellers, indicating you bullish movement until where? See? From here to here, what's sitting here? Pressure control of the sellers, pressure extreme of the sellers, right? Price came here to this area here where you have the P and PC, and then we started to reject. And maybe you're trading hope at this point. Oh, I think price will go up. I think price will go up. You think nothing. React, guys. React. Okay. So what happened? Big gigantic candle going down. You have another indication telling you, look, a bubble with the print. Okay, the buyers are getting completely cooked in this level. We're not going higher. We're going lower. Okay. So far, so good. Okay. All right. Okay. Let me know in the chat if you got any more questions regarding the vol chart, etc., before I move on to the next one. Just remember, guys, the most important is the RTH profiling. Without that, because this one here, unless you're a Bapo, he would hold it to the tip top. Yeah. So, but this one, guys, this one is the most important. Okay. Don't come to the charts with what, 3-5 minutes to go and jump in a trade and expect the win. No. Okay. This will identify. Okay. So for example, at the moment, I don't have any GEX levels now because market's closed. Okay. So I know where are we right now. I mean, we're down here. Okay. So what can I do from this point out? Okay. It seems like there is a lot going on for the X mod. Which are your most important confluences? Options. The most important thing is the buy signal. Thank you. The most important thing so the most important thing is this. Yes, there's a lot of things going on. I understand. I just wanted to show the different ways of trading in. But if we're just purely talking of what I'm looking, I'm basically waiting for price to hit one of these GEX levels, okay? And I want a buy signal. And, well, this is a bad, well, Friday was a bad example because it was just nuts, completely nuts, okay? And I would like to look left. So there's three things for the X model. It's the signal, it's level, so it can be POC, it can be delta, it can be options levels, or sorry, it can be GEX, okay? And the last one will be deep effort, okay? 1, 2, 3. Usually when you have all three, the probability is very good. Unless we have another day like Friday, which I don't think we will, okay? So, for instance, don't really have a, okay, for instance in this one, okay? Here, this is a deep effort, right? Okay, perfect. Now, this is a level, right? Okay, so step 1, deep effort. Okay, good. Step 2, level. It can be POC options. In this case, it was the HVL NQ1. Okay, perfect. Step 3, buy signal. Perfect. This was a loss, this was a win. Okay, I'm not going to cherry pick. Okay, this was a loss, and this was a win. Okay, perfect. And then, of course, as price is going up now, because you can also use these theories to continue to trade. I just wanted to cover this as well, okay? But essentially, the three main rules is deep effort, level, and signal. Just these three things. And then you can use other things as your confluences, right? If you have an extra deep effort, if you have the print, so on and so forth. If you have a buy imbalance or sell imbalance, okay? By signal, you mean signal from the big trades or imbalances both? Signal, I mean buy signal, the arrows, okay? Just the arrows. This one is just extra confluence. The three main, the core of the X model is deep effort, a level, and a buy signal. So these triangles here, these are just extra confluences for you guys if in case you're holding this trade, or you miss a trade, or you miss this buy signal, and you wanna get in a trade but you don't know what to look at. You can always look at these areas here. What are these arrows? What indicator? This is not an indicator. This is a part of a deep pattern builder. So deep pattern is indicator from DeepCharts that we set a certain rules for it to print. And again, shout out DB if you're watching this for helping me create this, and it will print that way. So it's based on the rules that I gave it to the indicator to print. Yes, Dustin, thank you. Exactly. Okay, now, okay. Now, for instance, oh, let me just give me a minute. Just gotta go to the little toilet. Think of some question while I go to the bathroom. Think of some questions you want to ask. We'll do a little bit Q&A before we move on to the next model. Oh, there you are. Okay, if you don't see a signal from the indicator, you don't enter. Your entry confirm is strictly for the single. Yes. No signal, no entry. You want to stay super disciplined. Or do you use other nope. For now, for the ones who if you're for the ones who are just starting to use the X model, just wait for the signal. And as you get accustomed to it, then you can use other confluences, but you need more experience. I am in the Discord and I'm sure where to find these models. Where are they? This is new model and it's being launched today. That's why we're covering this event. So that the moment I post these templates, you guys already know what to do with them. All right. Let me check Discord. Any questions on Discord? Okay. Now, let's talk about so X model is done. Okay. Model, high time frame, IC flow. I think there was one more. Okay. Yeah. Now, any ICT traders in here? Okay. For those who know ICT or SMC, you guys will know we're going to talk about the IC flow, which is the bigger one, okay? Just load that one up now. Okay. No worries, brother. That's why, thank you so much for all this information. I'm new to options flow and how to use it with Orderflow. I really needed this. Yep. No worries, brother. That's why we're here. That's why we are here. Okay, guys, if you've seen this before, any ICT traders, you know exactly what this is. Okay, any ICT traders, you know exactly what these things are. Okay, so okay, and I think Jima, if you're watching this, you know exactly what model is this. Okay, let me put this. Let's just focus on this. So this is what I call, these are sessions. Okay, so the yellow represents Asia session. The blue represents London session. The green represents New York AM session. And the purple will represent New York PM session. Each session has, it's a 15-minute, sorry. Yeah. This is a 15-minute chart, but you can also use it on a 5-minute chart. It makes no difference. But for the sake of this video, let's make it a 5-minute chart. Okay. Now, each session has an IVB model. What I mean by this. In here, what you will find is a lighter shade here of yellow. This is your 30-minute IVB, the first 30 minutes of the market open. Okay, this blue is the first 30 minutes of the London, and this one is the 30 minutes of the New York. Okay, so ICT has a concept from the ICT Mentorship 2022. What does this mean? So for the good past of the few years of my trading career, the concept is you need, let's say Asia opens, right? And you want London session to either take the high of Asia, or, and then you go for a short, or you want London to take the low of Asia for you to take a long. But sometimes, not sometimes, many times, when I do this, I would wait for price to take out this. So if we mark this one, okay, I'll make this white. Okay, and I'll make this the low white as well. Okay, so I'm just gonna call this okay. Put this at the top. Okay, so back in the day, what I would do, I would wait for this damn thing to take one of the highs and short, but this would happen many times. Why did we not take the high before we dump? Why did we not take the low before the dump? Will your indicator be free within the tempos, or you post with? Nothing is paid in my Discord. Nothing. It's all free, brother. I mean, we do have a donation channel. If you want to donate 20 bucks to our cause, of course, we can always use it, but that's up to you. So now here's a really cool thing. And for example, if you see this market is chopping around, this is for me the best time to use this model, when we're chopping around in Asia and London. Okay, so want to see something cool? Grab a volume profile from the start of Asia to the end of Asia. What do you see here? Remember what I covered earlier. I don't care which if it's green or purple. I do care it's at the value area high and there's a big delta, right? So let's mark that. Oh, look at that. Now let's add some more things. Okay, what do we have also? We have daily high, previous daily high. We have weekly levels as well. Okay, actually not, let me not show that first so it's cleaner. Okay, now let's add an imbalance tracker. What's going on here? Who's getting absorbed? Okay, the imbalance tracker is more significant in the 5-minute chart because I've increased the filter way higher on the 5-minute chart. So if you see an imbalance on the 5-minute chart, don't ignore it. Don't ignore it. Okay, guys, don't ignore it. Now, what happened here? Look at this buy imbalance here. Look left. We have a delta here. We also have this buy imbalance, so buyers got fucked here again, right? You see? Okay, let's add a few more confluences now. Let's add, I don't know, bar POC. Okay, what is bar POC before we move forward? A bar POC means the point of control, okay? We all understand what is point of control. But for those who don't, point of control is where most of the volume was transacted. So in this case, within this 5-minute chart, okay, we can see the most volume that was transacted in this candle was in this area. Now look at the color. This is telling you that the most volume that was transacted in this 5-minute candle was in this area. And who were the most aggressive? The sellers. But they got completely eaten alive, right? And this also is a fantastic way for a pullback. And you're going to see this a lot of times, okay? As you can see, 1, 2, okay? But you cannot, don't take it blindly again, right? If we take a look at this, when we reach to that level up there, what can we see? Okay? We see that the buyers got screwed in this area. Okay? We make this red or bearish. Okay? They got screwed in this area. We'll make this bearish as well. Okay? And then we see the point of control. Again, rocket theory. Okay? This is a bearish candle, guys. This bearish candle, right? Rocket theory. Where's the point of control? At the top wick of the candle, right? At the top wick. They are, so what do we have here in this candle? It's telling you a lot, actually. We have a buy imbalance where buyers got absorbed at the top wick. We have the POC, which is resting at the top body of this bearish candle here, right? This is giving you two confluences saying that this level is extremely strong. Sellers are here, okay? Now, if we also add this as an area, okay? And you can see again, look at the POC of this candle here. Price came back to it, hit and dump. Hit and dump. But for trend following, if you're in a trend, you don't know where to enter, this is how I do it, okay? And I'm not really good at trend following days, okay? I'm just gonna put it up there. But this is how I do it. These areas are all potential areas that if we are trending downwards, okay, areas for pullback, okay? Now, coming back to this area here, now we've identified this area, okay? Let's keep it simple. What if we add the big trades as well? Okay. So on the big trades, what can we see? The red and the green, they represent imbalances, okay? The red and the green, and the cyan and I guess purple or magenta represents the single prints, okay? Now let's go ahead and also add our big trades. Okay, now you see, what do we have as a combination here? We almost have what I call it, right? A big trades with a buy imbalance at the top wick. Then also pay attention to when you have a big trace, or rather a bubble that's completely in the area of the point of control, you can use this as a pullback, okay? By the way, those who are just joined the Discord, I am streaming the event on YouTube. Okay. As you can see, okay? Now, if we want even more, okay? And okay, we cannot call this ICT without having fair value gaps, right? See what I mean by IC flow? What is this? This is a fair value gap. But we're now adding more confluences with delta, buy imbalance, and bubble. Okay. Now, how to enter? So, for those who know, you know, okay? The AMD model, okay? This is your accumulation phase. This is your fair value gap. This is your manipulation, and this is your distribution. How to enter? You can wait for the price to do this, and then what happens? Here, you see this? The bubble with the print, perfect. That's one of our members, or my VP, Birdie. He loves doing this, okay? And you could take a short, right? Now be careful, because why? You have a big resting fair value gap down here, okay? Then you could have targeted this little bubble over here, okay? Look for areas where price can reject you, okay? Now, for example, okay? For example, let's add options to this, okay? So this model is not for New York session. Yes, it is. You can use this for Asia, London, or New York, okay? So now I've just added the GEX levels, okay? So let's say New York opens, right? New York opens. Let's grab the volume profile of London and do this. There we go. We have two big major deltas here. Okay, so step one. Okay, let's go step one and step two. Step one, draw the profile of the Asia and then see what London does. If you missed the London move, then you missed it, and maybe you're already here. Okay, it's too late. Okay, then what you can do is draw the profile on the London. Identify your deltas. Okay, so in this case, I don't know if you can see it, but there's a big delta over here. So I'm going to draw a box right there, the green box. And there's another big delta down here. Okay. This is yesterday. 9:30 here. What happened? Let me remove the session so it's a little bit more clear. See? Where did we wick? We came up here, right? What do you start to see? You have the delta from London. You have a fair value gap. You have the HVL QQQ options, and you also have the point of control in this bearish candle with big bubbles in the middle. Look how the price reacted, okay? And to give you more confirmation even, you see, again, another print with the bubble and the buy. So the buyers here got completely wrecked. You can see when New York opened, it went down here to the GEX 7 and Q1 and went up here, okay? So if you break this, sayonara, okay? Again, let's look how we can use the IC flow if the market is trending. Let's turn on again there we go. Oops, sorry. Sessions, there we go. Okay, now what happened? price broke these levels, right? Now what we can see, okay, let's say you are trying to catch the retracement, okay? So as price comes down to this level, you're wondering, should I short, should I long? Okay, so maybe you are looking at this and you're saying, okay, I think I want to short because there's a point of control here, there's a sell imbalance here, perfect. Yeah, and you're not wrong to short from here. You're not, okay? Because this is telling you potentially for shorts, right? But when this 5-minute invalidates this fair value gap, this is what we call an inverse fair value gap, okay? And we are going to use this a lot on the TTF model later when I'm going to show you, okay? Now, what happens? Price comes up here and starts to reject where? This area here, where the point of control is and this big bubble is, okay? Entry model, for example. Okay, so few ways to play this, okay? Say you want to wait the first 15 minutes of the market to conclude itself, okay? So the first 15 minutes, okay, you already know it's around here. Okay, perfect, right there. What do you see here? Okay, what do you see? Fair value gap. Look, prints and prints, okay? This is a 1-minute chart. Maybe you wait for price to come to these areas for a pullback for you to go short, because we can clearly see on this day we're short. We're trying to wait for a pullback to go short, correct? But you want to wait, say you want to wait at least 9:45 there, okay? So 9:45 is onwards is from here. So you trade from this yellow line onwards. What is your concept? This is not my concept. This is IC flow. We're just using ICT concepts, and we're pairing together with order flow. Okay. So in this situation, okay, in this model, IC flow or ICT in a way would lose, because this ICT is the concept is you wait for London to sweep the high or the low of Asia to go lower, okay? But now here's the kicker. Wait, let me finish New York and I'll show you something really cool. Okay, so trend following, okay? Wait, I got, sorry, here. Okay, so remember this level here, okay? So let's say price comes here and you start to see, oh no, this is a single print and this is another single print. Is this, so this model does not have your personal indicator for entry confirmation. No, does not. Maybe it will, maybe. But right now, rather than relying on a buy and sell signal, you know, it's important to learn these things, because you can be caught in a situation where the X model doesn't work. It's different. Everybody trades differently, okay? You might, you know, you might learn or like something from this model that you can implement later to your own, right? I don't know, it depends. So, for example, it's important here because now we are using what makes this unique, okay, is that if we're trend following, we're actually using the fair value gaps paired with order flow. So in this instance, let me just remove the session so it's a bit more clear, okay? So we're going lower, right? There's a fair value gap in here, right? What's resting inside this fair value gap? Let's take a look. GEX level, checked. Deep trades, check. But do you also see the single print in here? Let me zoom in. You see that single print? Right there, okay? You could have taken a short from here to go lower, right? But be careful as you go here. Remember these two levels here? Okay, so this move, you could have taken it, all right? But as price go down and you're wondering, okay, what to do now, right? So you can see here's an entry. If you're trending downwards, right? If you're trending downwards, find the fair value gaps that has some sort of deep trades, sell imbalance, etc. inside of them. Okay. Oh, I forgot to turn on the imbalance tracker. Let's turn on the imbalance tracker. Ah, okay. 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 Look. Look at this. Here. These are very strong levels. We have what? Sell imbalance together with the print level. Oh, sorry. Sell imbalance with the print level. Okay. So we mark that. Also, here, 3 sell imbalances inside the fair value gap, okay? So you can take this short, right? But just be careful, right? Nothing's 100%. Then what? If maybe you took a short here, perhaps. Yes, I would not blame you to take a short here. I would not blame you because this looks good. Okay, this looks good until it's not. Okay, as price is coming up, look where we tapped. If I try to be more precise, there. Okay, so then, well, you could have see absorption and take a short, right? The thing is, if you're in a short and you start to see this at the bottom wick of whatever candle, get out or just be careful, okay? And you can see most of the times when we have these single prints and price likes to revisit and close bullish, we're gonna go towards that direction for a moment. Now, let me see if we can find an entry. Now, a good entry, we don't have much. Here's an entry. Here's an entry. Okay. Yeah, okay, I see it now. So, I'm not sure if you guys see this. Okay. So, we've hit a level and we are now looking for a fair value gap to get invalidated. Okay. So, for instance, here, you can see this fair value gap over here. It got inversed, right? We inverse the fair value gap and you go short. For example, here. Okay? So on and so forth. Now you can see how many times we tap into these levels for trending and trending and trending, okay? And using these fair value gaps as well, you know, for our entries. Okay, ICT a little bit complicated, a lot of material going on here, but if you know what you're looking for, right, then you should have a pretty good idea. Okay, you guys got any questions regarding this model? So this model works great when we are consolidating. Okay, correct. Yes, right. So for example, this would have been your A+ setup, right? You swept the high of a previous session, for example. Okay, after you swept the high, you can see that inside this fair value gap, what do you have? You have this print, the POC, you have another imbalance here, and then you have your confirmation. This is your A+ setup right there, and pretty much it. And this typically works the best when it's during consolidation areas. Well, let's look for another example. Okay, here again. Okay, let's mark step 1. Draw the profile. Done. Okay. Now we clearly swept Asia high. Okay. This is the time for what? It's the time to short. Okay. From here. When to short? Let's see. look at the first thing you're gonna start to look for is one of these candles to give you a bar POC, meaning this POC at the top wick of this candle. Okay, the top wick. This is telling you that, okay, sellers are trying, but they can't do it anymore. Then, what you have next, you see this fair value gap in here, and then you start to see the POC with the bubble, with these guys. So basically, you're trying to get, if you're trying to short, right, and you're trying to get a little bit more confirmation, this area here is your perfect area for a pullback. Okay, on a 5 minute, and you enter the 1 minute. So what would that look like on the 1 minute? Let's take a look. What day is this? 2:15. Sorry. 4th of here. Here. Okay. Oh, no. Right there, here. Okay. Here it is, right? So we can take, okay, swap this up, yep. Right? What do we have on the 1 minute? You see the fair value gap up here. You see the big trades and you see the imbalances. Here's your entry, okay? And notice how, okay, so also, but during London, there are 2 times that it's important. Is the 2 o'clock, which is the open of the 2-hour is the open of the second 4-hour candle, and 3 o'clock, which ICT calls it the kill zone or silver bullet or whatever you want to call it, right? And you can see exactly at 3 o'clock onwards, this is when the price started. Okay, don't trade 11 o'clock, midnight, don't trade on that. Okay, you want to look for trades starting at 2 o'clock onwards, and if you still don't find any trades at 2 o'clock, then you can look at 3 o'clock a.m. Eastern Standard Time, right? So basically, your entry is what? You find a level. So for example, yeah, you find a level, and then you look for a fair value gap. In here, you wait for this imbalance or sell imbalance, and you can take the short. Do you enter on the 5-minute time frame, or do you wait for the candle closure entries with this model? I will wait for number 1. I will wait for a session to be swept or a delta. Okay, in this case, we went higher. Okay, then what I want to find on the 5-minute, I want to find something like this. This is the candle that I'm looking for. This one. Okay, I want to see a wick with a POC at the top if I'm short, and I will use this as a pullback area. All right, in this case I didn't have a pullback area, but I have this one here. Okay, this is what I want to short. Once this candle gives me that area, so for example, let's grab this one here, right? And perfect, we go up short. Okay, and then you have the big trades. Okay, this works. This is how it works, especially in choppy days. This is how you can play this model. All right, so essentially you wait for one of the sessions to get swept, the high or the low. You identify a fair value gap somewhere, either in the 5-minute or the 1 minute. On your entry, you look for the fair value gaps on the 1 minute, and when the price taps into one of these fair value gaps and you get some sort of these confirmations, especially with a single print. This is a print, you see? The bubble with this box, this is your entry for this model, okay? And I'll see if we can automate this. We'll see. All right. So any questions regarding this one? If not, we're going to move on to the HTF model. Cool. All right. I know it's getting late. I'm going to try to speed this up. Okay, now this is the HTF. So the HTF is very, very simple. Super simple, okay? HTF is basically looking at the higher time frame levels and entering on the the 1 minute, okay? So how I use it, okay? So for example, if you're trading the 15-minute, if you're trading the 1 minute, if you're entering the 1 minute, there's a law, okay? Not law, but there's a theory. On the 1 minute chart, you look at the 15-minute for levels. If you're trading the 5-minute chart, if you're entering the 5-minute chart, you look at the 1 hour levels. If you do the 1 hour, you look at the 4 hour, right? And there are some people who will actually, sir, is price give pullback on every key levels? Yes, ideally you want to get a pullback, right? So for example, in this situation, this is a 15-minute, okay? So you need to understand something, okay? ICT SMC, right? Structure, okay? This is what we call a change of character, okay? Is what ICT calls change of character. In order flow terms, this is what we call auction market theory. Okay, so auction market AMT. So what I mean by auction market theory, so you can see we're auctioning here. We broke the auction. Okay, we're auctioning in this area, right? We broke this auction and then we started to auction higher and we broke, right? So basically, they're almost the same thing, just different terminologies. Okay, but in ICT's world or SMC world, we call this a change of character. Okay, now on the 15-minute, once we broke this auction or once we have this change of character, right, and we went higher, here we have what? A fair value gap. Okay, now in this fair value gap, now this is super simple. Grab the volume profile from the candle that created the fair value gap. So in this case, you grab the volume profile and you go all the way here, right? And then you can see where is the highest delta at the value area low. Okay, so you can see this delta in below the value area low is down here. Okay, then imagine you mark this area. Okay, what do we have here? You see that? Do you have a single print here? Yes, you do. Yes, you do. You do. Now, entry. You can wait for price to tap here, wait for a candle to close bullish, and you enter here. That's entry number 1. Okay. Entry number 2. Here, you have another fair value gap, a bearish one. Okay, and you're waiting. You are waiting for this bearish fair value gap to get inversed. Okay, so this was a bearish fair value gap, right? So we're tapping into, so what's going on here? We're tapping into a higher time frame fair value gap. In the 1 minute chart, now we're using order flow. What do we have here? We have a print, okay? This area. Sorry. We're tapping into a fair value gap, right? A 15-minute. And then we drew the volume profile and we identified where the deltas were at the value area low. Okay? We come to the 1 minute and what can we see from here is we have a print. Then we wait for price, right? Because we wait for price to come back to this area and what? Tap. So why you don't take this one and why you don't take this one, right? That's the question. What about these areas here? You don't take these areas because why? These areas, you don't take this and you don't take this, but you do consider this one, right? Because this is in the fair value, this is in the fair value, but this one is in the fair value area low. Okay, price comes, hits, closes bullish, that's your first entry. Then in case you missed it, right, then you do have these bearish fair value gaps, or we can call this like imbalance zones, we want to call it, right? There we go. So price comes up, closes bullish, closes above this fair value gap, right? Then that's your first entry. Okay, or you can even see here that once you closed above this fair value gap, this bearish one, you can also see that we also have another gap down here, right? You can either enter if you're being aggressive the moment it closes above this, or you can wait for the pullback, close bullish, and enter here, for example. This is very simple. You're just using fair value gaps as your entries. It's in the value area high, or am I blind? The area is shaded at the top of the white part. What area? Sir, can I mark high and low of a high time frame, like 1 day, 4 hours liquidity? You can, but you need order flow. So I'll show you. For example, first let me answer that question. It's in the value area high or low, or am I blind? So this is the value area low of this move. Okay, the gray is the fair value. You want to stay away from this. The white is in the value area low. This is where the level was, as you can see here, right? So you can see price, there's three entries over here. Entry 1, we tap into the print level and close bullish. This is entry 1. Entry 2, we closed above this bearish fair value gap, making this an IFEG. Entry 2. Or you wait for price to tap into this fair value gap down here. This is entry 3, which would have been the second best. Okay, now to answer your question, higher time flag, like 1 day, 4 hours liquidity, you need to look at order flow. Like, let's say, for example, here, let's say we entered here. Okay, now you said, so 4 hour is a little bit, you know, how can I say, no, what you want to do, okay, is, again, you open the daily volume profile, okay, go to the ETH session, correct, okay, and wait, where was our entry? Let's check. There, okay, so that's our entry. Okay, now, okay, so as price is going up, right, so you can turn on here, and if you turn on delta rather than going to the 4 hour, 1 hour liquidity, right, which is, I know what you're used to, right, what can we see here? As price is going up, okay, so going up, going up, going up, going up. Wait, actually, this profile wasn't drawn here. Okay, so we start from, let me see, 18 Asia Open. Okay, so on the daily volume profile, this would be around here, right? Okay, so now you've entered here, correct? Where is the highest delta on the value area high? So let's mark them out. 1, 2. Okay. And then if you turn this on, Where's the highest delta? From the previous day's profile. If you're trying to go for those big moves, right? Okay, so here, the highest delta here, let's mark them again, is 1, 2, and we'll mark the point of control as well. Okay, rather than going for highs and lows, see what I mean? If you were to imagine you were in this trade and you're trying to target the high over here, right? And I've been in trades like this before, okay? It's like, oh my god, this is so bullish. We're definitely gonna take out these equal highs, right? Sound familiar? Yeah, equal highs my ass. Okay, that's why it's called IC float. Okay, we're using profile to target where can we get fucked, and you can see as price came up here, and if you had, I don't know, if you had in break even, you would have gave back all the money back to the market, basically. So what you could have done, you could have hold the trade. If you close above this first level here, hold, and then more likely we're gonna come up to this level. Okay, basically. Mark high and low of a single candlestick 1 day or 4-hour time frame. I don't look at that because this is the fit. What I do is I just look at the volume profile. So for example, let me clean the chart. Okay, so if you this template, if you click this daily volume profile, okay, this will give you the profiles of there we go. Okay, this will give you the profile of a day. Okay, so this gives you the profile of 1 day. This is 1 day, and rather than looking at 4-hour high, 4-hour low, or 2-hour low, you can simply look at this. Okay, very, very systematic. If you're like, for example, you're taking this long from here, right, and you're trying to see, okay, where can price reject? Okay, look at the delta over here. Let me hide the price. Let me also hide these lines, and you'll see what I'm talking about. Okay. Do you see from here? What? Oh, let me remove the view up as well. There. Okay. It's very easy to see now. It's more simple. Okay. You are in the long, correct? You are in this long over here, starting from here, right? Then you mark what? Let's mark. We are now talking about the HTF, high time frame model. Okay, so you are looking at only 15-minute fair value gaps, basically. Okay, so to answer Bobla's question, okay, you mark the high delta here, right? You mark the other high delta here, and you mark this is another high delta here, and look what happens. Okay, so this was your entry. Got it? Okay, now okay, but let's say you want to look at the 4-hour. Okay, it's still higher time for an analysis. Okay, so 4-hour, let's check it out. You really want to look at the 4-hour. Let's go ahead. Here's the 4-hour. Okay, so well, here, turn on this indicator, and now you can see this level here was a 4-hour fair value gap. I don't know how long I need to go for this one. Okay, or this one. And what's cool is you can apply the same concept. So for example, where in this 4-hour can we look for a trade potentially, right? This is a big 4-hour fair value gap, right? Where in this 4-hour can we look, right? Okay, so grab the profile, do this. Perfect. Now, where is the highest delta? Here, right? Let's mark that, and now we're gonna go, let's mark this. Let's make this white. Okay. Now we go back to the 1-minute chart. So 3 steps. Okay. Find a fair value gap, draw the profile, identify the highest delta inside that fair value gap. Now I need to see where is this gigantic. Was it that one? Oh, can't be. Ah, there. Well, oh, there you go. Okay. Like that. See? See what I mean? Here, tap. You have the single print. Close bullish. So you even have an inverse fair value gap over here. There, okay? So 2 entries. Once the price taps here, you can see here we have a print. Price taps it, you put a limit order there. Or you enter the moment it prints like that. Or you wait for price to inverse this fair value gap. Then put your stop slightly below here. Like that. In higher time frame, which one is better, FEG or order blocks? FEG, because order block is subjective, okay? Order block, for now, we don't have any indicator on DeepCharts that will show order blocks. And the way you draw, and everyone draws order block differently. Okay, I draw differently, you draw differently. So, but FEG will always be the same. So stick to FEG. And it's also easier to draw the profile on FEGs, basically. Okay. Now, I'm not saying that you can't use the okay, the X model for this. You can also combine this with the X model, for instance. Let me load the X model. Hang on. Can we not use a FEG indicator for the high? Yeah, you can. It's just cleaner like this. So for example, here, right? This is the X model. In order to automate, yes, you do have it here. So for example, this is a big FEG, right? The problem is, if let's remove this FEG that I drew, right? And then, well, it doesn't show it anymore, but this was one of them, okay? For some reason, it's not showing all the FEGs. But on the 4-hour, is quite easy to identify on the 4-hour. Or are you talking about the FEGs on the 1 minute? Now, what did I want to say? Oh shit, I deleted the fucking thing again. Hang on. Here. Green. There. There we go. Okay. Now, here. Now I need to look for it. Give me a sec. There we go. You can still use the X model like this. Ah, is it clear? See? And that's why I'm covering all the models depending on which one you want to use. You can use the X model with the HTF model together, right? So you can see here, this big green box, this was a 4-hour FEG, and then this white box, this was the delta right here. Okay, so you see this green here? Oh, maybe I make it like this instead, right? We make it green. Call it delta, for example, right? There you go. Then what? You wait for price to come there, and bang, you get the signal to go higher. Okay. Okay. Do you guys want to continue more? I look like I'm losing a few audience already. Or is it enough for today? Actually, no. I only have one more model to cover, and I can't do this anymore. Okay. So basically, what locations do you think are stronger, option flow or the FEG delta zones? So imagine if you, okay, so I always do this. Whatever the case, I'll always import the options levels in here. So for example here, okay, this is already not correct, but for example, let's imagine, okay, imagine that in here we had, okay, let's imagine this was here inside. Okay, so this gives me extra confluence for price to tap and go up. Can you go over your risk management, since most of us trade proper and on a 50K? How much do you normally risk per trade? Also trade management when you go break even. Okay, we can cover that. All right, so I'll always upload the options levels. Okay, and let's say I have a 4-hour fair value gap. I will check if there's an options level inside that area. All right, and then I will draw the profile and see where the delta is. If they're almost in the same area, like for example here, this guy over here, right, then that gives me an extra confluence. Okay, all right, last model. This one is easy, and then we'll go to risk management, and I'll cover the risk management there as well. Oh no, shit, I have 2 more to go. Sorry. Now we're going to go to the very popular and one of my favorites, IVB. Okay, and this is going to be quick because it's very, very simple. Since we already covered the prints and buy and sell imbalance, okay, now when you do the IVB, the first thing you need to do, okay, so you see this is your daily cash profile. Okay, so daily cash profile, we know we want to go lower. Okay, but when will I go low? When will I short? Okay, and this is how I tend to identify, okay, am I actually going to go short, or am I actually going to go long? So again, step number 1, mark the POCs. Okay, you can use this one, previous days, and then you don't use 1, 2, 3, 4. You can use this one, and you can also use this one. Okay, now perfect. So that's the first step again, marking the POCs. Okay, second step, identify where the profile close. This profile close below these profiles. Okay, you want a short. Okay, you're looking for short of the breakout of the IVB. That's it. If we close above this profile, so imagine if the profile we close over here, right? Then you will wait for the IVB to close like this, and you go for a long. If we close below the profile, the previous day's profile, then obviously you want price to come back like that and go short. Okay, again, you are using the cash profile to identify the bias for your trade. Now, again, same thing. This is the IVB. Okay, when you break, okay, so as you can see, many entry models here. Either you break and you short aggressively, or if you want to wait for a pullback, as you can see, look at this print over here, right? You tap it, close bearish. Again, there you go, right? You'll probably be done for the day, okay? Now, what happened next? Price came back above it. And there's one thing I want to mention also. The break and retest is important. Break, retest, close bearish. You did not have that, right? So what happened? The price came back, broke above it. Let me zoom in more closer. Here, right? Price broke the IVB short, okay? And usually, and I've traded IVB for a very long time, I like to see a pullback, a retest, and a bearish candle for me to go short. But now, with this model, if we go, hello Island Garb, if we go lower and it doesn't test and we are feeling FOMO at least, okay, you see, oh, look at this single print. All right, let me wait for a retracement. Rather than chasing this, wait for the price to at least come down here, tap this, and then you can take the short. Okay, that's one way in case price goes really aggressive without you. Okay, you can always use these areas for a pullback. Now, break and retest. Look at this here, and there's a common, there's a law, not law, but there's a theory. You're very much welcome, INL. Now there's a theory, okay, and a lot of orb traders will agree with me. If you close back into the range, you can play the long, okay? If you close back in the range, you can go for a long, okay? But when, okay, so key areas to consider. Number one, our RTH cash profile. Are we short or are we long? We are short, right? We are short because of this. We are short because this profile already told us that told us that we close below these profiles. So we want to short, okay? That's the first thing we need to consider. Number two, okay? What is gamma? Are we negative? Are we negative gamma or are we positive gamma? On Friday, we were negative gamma. So when gamma is negative, breakouts and trend following models work the best. Okay? But if you only do orb, okay? So imagine, let's say price did not close below, okay? And stayed in a consolidating area like this. And if gamma is positive, but you have a breakout, okay? And if you close back, you can take the long at least to the mid-level of the IBM. So what typically what happens on range choppy days with the IVB or orb, and you have what we call it a fake breakout, price will tend to break, come back, close, retest, give you a bullish candle, and you can take this long to the middle here. Now, and the same concept starts again. Break the mid, test the mid, gives you a bullish candle for you to go higher to the upside of the IVB. Okay, and then the same concept applies again. Break again the high, comes back to retest, gives you a bullish, and then you can keep going. Now, obviously, if you have IVB, fair value gap, or you have an imbalance, you have a lot of order flow things we can use it. Okay, so for example here, we broke. Did we retest? No, we did not retest, but we want to, but let's say you want to enter. Price come, taps this print area over here, okay, close bearish, and you short from here. Then what you start to see, the price start to go back to this area. But wait, and you're looking at this, oh, okay, perfect. Price right now is closing above, back into the range of the IVB. I'm going to long. Don't long yet. Why? First of all, look left. This is the 15-minute orb. So, but the same concept works on the 30-minute orb, the break and retest. Okay, so the first thing you're going to look left. Be careful, because what can we see here? Damn it. Okay, never mind. What can we see here? We have this one here. Okay, so this level here and this level. So we need to be careful if we're trying to long. And if we're trying to long, you want to see one thing. If this level is going to break, normally you will see acceleration. So you can see acceleration normally with the speed of tape. Okay, now, but what happened? Price broke above the range. We need a retest. Did we have a retest? We did have a retest. Okay, this red candle here, you see, was the retest, and you even had a print over here. The last thing you needed, you did not get, which was a bullish candle, and instead you got a bearish candle. Okay, and then price kept going lower. Now, if we broke back again in the low, right, we broke the IVB, you want another retest, which you almost got. Okay, so, but even if you took this short, it was still okay, because I know it's a little bit hindsight. But look at the next one. This is the one, the only time it completed all 3 steps. This move here. We came back to the area, as you can see. We retest. First of all, we have a break, right? Then price came back. Now we have a retest, which on this candle. Then we have our confirmation candle. Right, which would be this one. You could have entered here, okay, basically. But if you want to, let's say you missed this entire move, okay, 2 ways you can do. You can see this is your New York VWAP, okay. That's also one of the Is that big trades or imbalances? These are also the cyan is big trades. Wait, let me check. Sorry. So the big trades on this chart, the red is the big trades and the white is the big trades. And the cyan and magenta, these are sell imbalances. If it's too messy, you can also just hide the imbalance tracker and you just have it like this. Okay. Now, few ways you can use the VWAP, or you can be a pro, not pro, but you can also understand that we are in a consolidation in this area. As you can see, price is what? Trending, right? Then created a higher high, a higher low, and then a lower high, right? You start to draw your profile from here to here if you want to find a pullback area based on the profile, like so. Like for example, let's say until here, okay? There. And you can see from here, the biggest delta is this guy, right? But maybe let's make things a bit more simple. Okay, that's one way to do it. If those of you are comfortable with drawing the fixed range volume profile, this is one way we can do it, right? Obviously, the easiest one is just a swing high, right, to the swing low, basically like that, okay? And then you just trail it, and then okay, so swing high to swing low, as you can see. And then you can see where's the Val area high. The highest delta in the Val area high, which would be not, well, it's over here, but we have another delta here. And this was another level for the pullback, as so, like that, okay? So you can either draw the consolidation from here to here, basically, right? Like that. But this was a little bit more harder. You guys, if you need help to learn more on how to draw the consolidation, right, you can always approach me in the Discord. Or maybe that will be for the next event when I'm available. The other way to draw the profile will be the swing low, swing high to the swing low here. Bam. Okay. And then in this situation here, price tap the VWAP of this profile and then bang. Okay. The other way, which is a little bit more simple, okay, so here we come back to the 5-minute chart, right, as so. Okay, so what have we here? Remember what we covered on the previous model? What do we have? Mark the POCs. 1, 2. There's your entry, your pullback area. Right there, okay? And then in this area, what do we have? Do we have any single print or deep trades, as you can see? Do we have any fair value gaps here? Nope. Here, okay. So we've entered here, and then what do we see? We can also see that we have a fair value gap here, right? Like so. And that would be your trade. Okay, not $1,000, just, you know what I mean. But yeah, pretty much like that, as so. Okay, so let's review. IVP, go to the RTH, identify the direction or the bias. Okay, if the profile closed below the previous day's profile, then you are short on the IVB. If you close above the previous day's profile, then you are long on the IVB. Okay, if you are ranging IVB, you wait for the fake out, right? And then after the fake out, you take and you wait for the, for example, if you are like consolidating like here, like can I see previous days IVB? No, I can't. Great, thanks. Okay, so if you are consolidating, right, and for example you have a breakout, so let's imagine you broke out here, but you are consolidating, but you know on the cash profile you are choppy, right? And if price closed below, right, you're like, I don't know about this, because now maybe you are entering a short on the value low of the previous day's profile, right? So if price comes back and closes inside, you can take, retest, give you a bullish candle and take the long, okay? If, for example, let's say the price closed below, like for example, right? Here on this day, we closed below, right? We closed below the previous day's profile, right? And price suddenly closed here, right? So imagine the profile is telling you to short, but the price action on the 1 minute chart broke the IVB. Do not take this long. Wait for this goddamn thing to do its thing. And if you close back into the range, retest and give you a bearish candle, you can take the short from here at least to the mid level of the orb, break, retest, and the thing, so on and so forth, basically. Okay, that's the IVB. Okay, now almost there, guys. Give me 2 minutes, I'll get some water. Okay. By the way, I just want to give a quick shout out to Rain because this is his template colors and indicators, and I've just modified it to suit the IVB model. Okay, now one more thing I forgot to mention. On your 5 minute chart, these purple magenta lines, these are all imbalances. Do not ignore them, okay? When you see imbalances on the 5 minute charts, don't ignore it. Okay, next, and next will be the final model, which is the So we covered HTF. We covered IC flow or ICT. We covered the X model, which was the bidding. Now this is the final model. Okay, so what is the TTF? Tori trades fractal model. Okay, because it uses trend lines. Shout out to Tori. Okay, now let me upload the other one and you're gonna see. And these are for the people who are comfortable. So we're going to talk about trend lines and price action, okay? So this is one of my favorites ones, okay? Let's get rid of all this. Okay? So why I mentioned so much about the prints and the imbalances and the fair value gaps and the price action and ICT, because everything now is going to, that we've covered so far is going to be here. You have both 5-minute, 1-minute open for the IVB. Which one do you use for what purpose? I use the 5-minute. So on the IVB, let me go back to that one. On the IVB, I am just looking at the bias. I use this as my bias. Okay, so if the previous day's cash profile, in this case, closed below this profile, then I am looking to short the IVB, and I'm looking for and I'm marking the point of controls of some of these cash sessions where price can reject, basically. Okay. And then at the same time, the 5-minute will, if I'm looking for a pullback area, the 5-minute POC gives me an area where I could potentially look for a pullback. I'm just looking for like zones, basically, like that. Okay. All right, let's go. Okay, now, for example, this one, let's put on the GEX levels. There, okay? Where's market open? New York open here. Okay. So, again, you can use the IVB on this track. This is everything on the 15-second, right? So, how I like to play with this. Okay, so first, it's very, how you say, straightforward. There's your trend line. Okay, you want at least 2 touches. Step 1. Okay, then this is, I'm going to show you a long example and a short example. Okay, here's a long example. Ignore the IVB for now. Okay, and I think we had, I remember here we had the GEX level somewhere. I forgot, it was somewhere here. I don't have it now. It was somewhere here. Can't remember. It was somewhere here. This came from the GEX bot. So every day in our stream, I stream the GEX bot for everyone. So the GEX bot gives us live options gamma levels, open interest, and 0 DTE levels. Okay, live. So price came here. What am I looking for? I am looking for a break of a trend line and a change of character or a flip of the auction. So it would mean this. Okay. Now, I am now pairing this with ICT. So we do have a fair value gap down here. And then do I have a bearish fair value gap somewhere? Oh yeah, okay, here. Okay, so here we have a bearish one. Right there. So what I'm trying, how I do this is I'll wait for price to come. Excuse me. Doesn't work yet. Come, break of the trend line, I'll enter. Okay, break of this, I hold. And as you can see, and for example, here, market structure again, right? Coming down here. What you can see here. Okay, one touch, two touch. Perfect. So sometimes I'll enter when I'm in a level, I'll enter aggressively. Okay. And this is how you can play it. As price is going up. Okay, now it's hitting some sort of a gex level here, right? And starting to, how you say? It's starting to struggle. Okay. Now to find those early entries, right? So you can see here, we also have fair value gap here. I make this a little bit darker. No. There, like that. Okay. So we inverse this fair value gap. And the short would be from here, right? And the long would have been either you could have taken this one, or you could have waited for a tap for this fair value gap down here, and you could have entered here at the bullish one. Okay, now see how many times it came and respected this area here. See, okay, and you can keep doing this. And what I found, this is really good on the 15-second chart. Okay, you can go from one trend line to another, but it's just like, for example, here, like that. Okay, you want at least 2 touches. When the trend line is as steep as this, right? That's not good. You need a low, okay, like a lower low or something. So maybe here or here. This would have been better. Okay, but this is a bit hindsight, but fuck it. This one then, okay? So that's one way of trend line. Another way you can also do is use the 15-second as a breakout. So, for example, here, and here. Okay? Like that. You can see how the price broke out, retest, and go. Now let's see if we can find any single prints. So one thing you need to understand about, oh yeah, someone mentioned about risk management. Yes, sorry about that. I'm going to talk about that now. Okay. So in this situation, let's say you have a, let's say you took this short, right? Let's go for the long first. Okay. Yep. Okay. Let's say you enter here. Okay. Now what I'm looking for, let's say I enter with 10 micros. Okay. I'm going to look left and see where price can potentially screw me. Okay. So the first area that I'm looking is this guy here, because this guy here has, there. Okay, this guy here has a fair value gap and 2 sell imbalances. Okay, so if I'm going with 10 micros, I am taking half of my contract here. Okay, so 10 micros. Oh, this is on mini. Well, you do the math. Okay, I'm going with 10 micros here, and I'm taking off 10 micros, okay? And then I will either go break even, which in this case I would get stopped out, or I would lower my risk until here only, okay, in terms of risk management. And I only risk, okay, conservative $250, aggressive I risk $500, okay, 1 mini, sometimes 2, depending how volatile the market can be. Okay, so yeah. And for example here again, right, let's say you've entered on this area here, right, this area, so this candle inverse this IFEG, you went 10 micros here, okay? Now you gotta look left and see where price can potentially screw you, okay? So in this case, so you have to break up the trend line there, right? So you broke the trend line and you inverse this fair value gap down here, okay? Now you're looking, okay, where can price screw you? Okay, you're in 10 micros. So this is the first area price can screw you, right? So you have to be careful here, right? Maybe lower the risk. Excuse me. And let's say, and then if it broke, then maybe you look left again. This can be another area where price can screw you as well, right? But in this case, on Friday, we just kept going lower and lower and lower. So basically, you are looking at what? In this situation, maybe we can, oh, I can't touch, oh yes, I can. We're looking at, let's say, EGs, right? There, okay? These are areas, if I'm in a short, and I'm looking, okay, this is an area. If I break this FEG, I can move my stop loss. If I break this buy imbalance, I can move my short. If I break this, I'll keep moving. And that's how I'll trail, right? The break of every fair value gap that I see, okay? And obviously this one made the fair value gap over here, and you guys get the gist of it. So, yeah. I think that's about it, guys. So again, the most important, but the conclusion of this, right? It's this one. Your cash profile. This is the most important thing, okay? Whatever model you choose to do, the most important thing is to identify your buyers, not bias, but the direction that has the most probability to go in your favor. Then you grab your levels or GEX levels or whatever they may be, right? And you just play with those guys. Okay, so we've pretty much covered all of it. I hope this was educational. I hope you learned something from it. It was a great pleasure to do this. And let me know. The templates will be available shortly. And for those who need more questions, you can always approach us on the Discord, okay? And yeah, if there's nothing else to cover, then we will end the stream. Thank you all. It has been great. We are 3 hours in this. I said that this was going to be a long one. And I hope, yeah, to see you all in the Discord. If you have not subscribed yet, please do subscribe. And see you on the Discord. See you on Monday. Thank you all, and I'll see you on the Discord.